What is natural capital or natural value? Natural capital is everything around, everything that nature provides to us that we depend on for a healthy economy, but we don't necessarily pay for. There are a whole range of ecosystem services that underpin the productivity of agriculture. Things like soil formation, erosion control, water purification, filtration services, and broader services society depends on, like climate regulation and carbon sequestration, even pollination. To better understand natural capital, we've got a few specific examples that we've picked out, and bear in mind there are thousands of these all throughout the environment. The Regent Parrot. Almond Australia investigated the costs of Regent Parrots in almond orchards, and not surprisingly to anyone with exposure to orchards, the parrots cause around $75 per hectare per year of damage to crops. However, at the end of the season, Regent Parrots eat the disease-ridden mummy nuts, which would otherwise cost $300 per hectare per year to clean up. Thus, the question of parrots on almond orchards is about managing the timing of their visits rather than just getting rid of them completely. Microbats. Microbats are everywhere in the US, and they found that because bat eats 2/3 of its body weight in insects each evening, they're worth between $40 to $300 per hectare to US farm production in avoided pest control costs. Melbourne's forested catchments provide water filtration services. If the forest was replaced by an engineered filtration services, it would cost each Melburnian about $60 a year more. And finally, the Great Barrier Reef. We all know the tourism benefit of the Great Barrier Reef, but we also know that 50% of commercially caught fish come from that area and come from 30% of the reef that is now a National Marine Park. So they're just a few of the examples out there. You could walk out to any farm in the Wheatbelt and there's thousands more. If you want to appreciate the scale of change that can occur when a good business case is linked to the sound management of natural capital, you need to look no further than the rapid rise of no runoff till in the Australian cropping, which has led to significant improvements in productivity and the resilience of cropping systems off the back of a land management approach that conserves soil, water and nutrients and requires less energy consumption. This chart shows the ABS estimates the incremental effect of land degradation on the value of land and the lost profits from agricultural production. The magnitude and trend of this data is sobering. Over the past 10 years, the cost of land degradation has increased significantly, and in 2010-2011, it cost more than $600 million in lost profit. This slide is an attempt to portray the relationship of natural capital to other forms of capital. In short, natural capital underpins all other bases of capital, being social capital, built capital, and human capital. Using the concept of natural capital, we can make visible the economic drivers and benefits of good environmental management. So why does NAB care about natural capital? NAB's Australia's largest agribusiness bank. We've been supporting customers for 155 years and we want to be around for another 155. The broader global context is that we're confronting major challenges of global population growth, water scarcity, increased climate variability and less arable land. In short, we need to be able to do more with less. The only way to do this is off the back of a strong natural capital asset base, making optimal use of scarce resources, and we know that the good management of natural capital plays an important role in farm productivity, profitability and resilience. It is important to recognise that when our customers are successful, we're successful. This means we have a role to play in supporting our customers in managing natural capital risks, among others, and in taking advantage of new opportunities that an increased focus on sustainability brings. We conduct a customer satisfaction survey each year, and each year we do an additional survey on top of that in regards to a particular subject at the time. The survey in 2014 was done on soil health energy costs. So we asked over 5,000 customers what their top natural capital concerns were. Came out at soil health, energy costs and water scarcity, closely followed by runoff and biodiversity. Interestingly, 74% had already made changes to their business as a result of natural resource sustainability constraints in the past 2 to 3 years. We found that fruit and veg growers are the most likely, 88% of them, to have made changes to their businesses as a result of natural resource sustainability issues, largely being water scarcity. However, a significant 77% of crop growers and 76% of livestock producers have made the same improvements in their business in the past 2 to 3 years. Not surprisingly, intentions to make changes in the near future are highest among those who have already made changes, where benefits have perhaps been acknowledged from past experiences, and also businesses in the growth phase. Horticulture businesses were also the most likely to make changes. We're listening to our customers and supporting them in making investments that will strengthen their own business models as well as improve their natural capital assets. So let's unpack the relationship between good management of natural capital and farm performance. There are a wide range of factors that will determine farm performance. The point here is that good management of natural capital is one of them. We talk about the link between natural capital and farm performance by looking at productivity, profitability and resilience examples. In terms of productivity, we can see from customer insights as well as industry research that sustainable grazing practices can result in significant increases in stocking rates off the back of reinvestment in natural capital assets, namely soil health and biodiversity. For example, one of our clients, the Agricultural Information and Monitoring Services, ran planned grazing trials of native grasses across properties in South Australia and New South Wales. They converted the larger paddocks into smaller paddocks through fencing and water investments and managed grazing and pasture recovery. They maintained vegetation cover, had a higher water filtration and fewer weeds. This all resulted in a 47% increase in stocking rates and a 26% increase in pasture growth, along with a higher gross margin. David Blackmore is one of Australia's premier Wagyu beef growers in central Victoria. He moved his cattle stock to lower stocking densities and offer feedlots. They gained a 20% increase in productivity on exactly the same rations. David is now experimenting with different grasses to see improved soil structure and happier cows. Similarly, Natalie Williams, a Nuffield scholar from Granville Station near Jericho, Queensland, invested significantly in their natural capital assets with improvements in pasture from Class D to Class A in 15 years, dramatically increasing their carrying capacity. They have reduced input costs, including reduced mustering chemicals, and have lower methane emissions. In terms of profitability, looking at the prospect of rising energy costs across Australia, there are significant opportunities to reduce bills through investing in energy efficient upgrades. Dairy Australia recently implemented an extensive energy efficiency project that included energy audits of 1,300 farms. These audits highlighted a number of savings, including no or low cost maintenance or adjustments of running times through significant upgrades of technology or machinery, like hot water systems or plate coolers. Climate Works analysis suggests that the average dairy could cut energy costs by 19% through investments in and water heating systems. Likewise, the apple and pear industry program What's in Your Business found that the average producer could cut energy costs by 16% per annum. Another example is Cracknell Tomatoes in Tasmania, who installed a biomass boiler that runs on discarded timber from landfill sites to heat their greenhouse, enabling year-round growth of tomatoes. A dust and ash extractor ensures no pollutants are emitted, and they inject CO2 into the glasshouse to maximise their yields. A state-of-the-art irrigation system with drippers and treatment of recycled water with ultraviolet light ensures runoff water is reused. This has resulted in significant fertiliser and water savings through reduced runoff, and production has increased by more than 300% because of the extended season and enabling expansion into other markets. I think one of the most important concepts to understand the linkages between natural capital and farm performance is resilience. Resilience is an important concept both for agribusiness and for NAB as a bank. Essentially, resilient farmers are able to bounce back more quickly from external shocks, droughts, floods, etc. What this means for farmers is more consistent returns across good years and bad. This consistency is critical to be able to plan, manage and invest in one's business over time. It also enables the building of trusting relationships and loyalty with supply chain partners. For example, as a result of no-till, controlled traffic and constant innovation in machinery and optimal use of inputs, one of our customers, a grains farmer from Wimmera in Western Victoria, has a strong record of consistent crops and higher yields compared with their neighbours, even in the dry years. This is as a result of improved soil condition, increased water retention, among other things. Another way to think about resilience is what one of our customers near Moree did. With reduced water allocations and increased climate variability, Dick Estons wanted to diversify his cotton farming business and looked at the best crop for his region that would provide the greater return for the least amounts of water and survive increasingly frequent and heavy summer storms: oranges. He's now building an export market for orange juice with the aim of establishing a sustainable citrus industry in northwest New South Wales and southern Queensland. So, what is NAB doing to support our customers in managing natural capital for stronger business performance? We're starting by trying to understand customer experiences, needs and expectations from us as their bank, and supporting exchange and showcasing best practices. For example, our Agri Calendar in 2014 showcased 12 of our customers who were going through natural capital changes and what they'd achieved, together with other vehicles to support innovation and learning. 2, by building banker capability, so that customers should expect to be able to have conversations with their bankers about natural capital risks and opportunities and how best to manage them, making it easier for them when seeking investment to support these initiatives. Number 3, through products and services. For example, we have a solar panel asset finance product. We've been funding solar panels for the last 4 years, I think it is. And we also announced in June our energy efficient bonus on NAB equipment finance through our partnership with the CEFC. We offer discounted finance to businesses that improve energy efficiency through purchases of everything from cars, irrigation equipment and solar power. NAB's agreement with the CEFC enables us to offer a 0.7% discount below our standard rates. Up-to-date information from that program that's been rolled out is we have drawn 60 million of the 120 million made available since June till October the 1st. So we have had a massive take-up of that program, which is great to see. And also back to our themes, engaging with industry associations like the Wheatbelt NRM to understand their sustainability goals, what data they have on performance improvements, challenges, and what tools are in place to support farmers in strengthening their natural capital management, which the dashboard looks really exciting. So, partnerships with research organisations to build up the long-term and multi-site data sets that show the relationship between financial performance and natural capital management over time. And finally, working to build our ultimate goal would be working to build natural capital into our credit risk assessment process over the next 3 to 5 years, allowing us to provide more appropriate pricing, which is what most people worry about, against their natural capital risk, and reward those people that are doing more for it. So as a final point, I just wanted to mention that while we believe this is the right thing to do for Australian society and for the environment, it is also the smart thing to do to ensure a sustainable, prosperous and competitive agribusiness sector for years to come. Thank you.